Hi, welcome all. In this session, I am particularly going to discuss about various topics. First of all, we this video is basically made for the investors and traders who are currently witnessing what is happening in stock markets worldwide as well as Indian stock market. So our first slide is all about hawkish Fed. In this slide, the first point is Fed minutes showed far more discussions about a rate hike than Powell admitted in the pressure. Right now, everybody in the USA is talking about potential rate hike in upcoming time due to inflationary pressure, you know, and as well as the new appointee that will take place of the Powell. Uh, he is kind of hawkish in nature, so that's why people are expecting that there will be a rate hike instead of rate cut due to both the reasons. So second point is market was dreaming of cuts, reality is turning hawkish. Okay, so this is why I gave you the two regions. First, probably the crude oil prices, which has been rising for a very long period of time due to current war which is going on between Iran and USA. And Strait of Hormuz is one of the reasons of the supply cut in case of crude oil that is leading to prices going up, crude oil prices going up. You know, third point is Dalal Street now watching July and December window for a possible hike. Basically New York Street we call it. Basically वहाँ के stock markets जो हैं they are expecting the possible rate hike in July to December period. लास्ट पॉइंट इज महंगाई दुश्मन है और दुश्मन बड़ा तेजी से बढ़ रहा है. The major problem we are facing in stock market right now and economic wise is inflation, and inflation is being pushed high due to crude oil prices and supply shock, supply disruption in case of crude oil supply. You know, so this is all about hawkish Fed. We will probably see the Fed not cutting interest rates, even potential hike on the interest rate, which will negatively affect the equity valuations in upcoming time, which can, uh, now second slide is new Fed regime. In this, the new Fed governor is going to take place of the Powell in upcoming time. Kevin Walsh takes over the Powell as Fed chief. And Trump has shifted his tone, which you know he carried during the tenure of Jeremy Powell. Now he's sounding like he supports the new regime of Kevin Bosch, and Donald Trump specifically stated that I will let him do what he want. You know, third point is plan to kill forward guidance, fewer pressures, no dot plots, fewer breadcrumbs. Basically, the new governor, which will take place of the Jeremy Powell, named Kevin Walsh, is somehow, you know, sure that he will not conduct any conferences on a monthly basis, or he will not portray, he will not show all of us the dot plot projections. He will not talk about anything that will guide market regarding Fed policies. We all have to assume, as per the data the Fed governor will release in upcoming time, as what is going to happen in the economy. So it will be completely silent mode in in the upcoming tenure of Kevin Bosch. Fifth point is market must fly using raw data instead of Fed speeches, higher volatility. Actually, the approach that Kevin Walsh has of not giving the press conferences, not showing the dot plots, you know, is somehow will lead the market flying usually on basis of raw data only, without any Fed speeches and all, which can impact the volatility in the market. Volatility may jump in the upcoming time, you know, and it will be hard for the investors to track the stock market, whether it will go up or down. The volatility will be, extreme. Last is basically the approach is somehow kind of a gupchup dhanda, silent mode in upcoming Fed after Powell. No, so this is somehow market is sensing right now. You know, next is bond market stress. In this, we have been seeing the U.S. 10-year yield going towards the 5% mark, you know, due to war in Iran, which is keeping oil elevated, feeding CPI, PPI, and PC. Actually, due to crude oil prices, which is currently trading at very high, that is directly impacting the CPI figures, PPI figures, and PCE figures. CPI is consumer price index, PPI producer price index, and PCE personal consumption जो expenditure होता है, that we talk about PCE. You know, so second point is term premium rising as fixed income stability breaks down. 5% US 10-year is now a very real possibility. You know, Currently in USA, all are talking about uh, the 10-year interest yields touching 5%. No. So it's kind of a possibility that it will touch and will be very negative for the equity markets. At 5%, global liquidity tightens and money rushes back into the US assets. Emerging markets that we have, like India, China, the emerging markets, Japan, these the money will flow outflow from these markets and go to USA, can go to USA. So it is sensitive issue that if the US 10-year treasury yields starts climbing towards 5%, it will be very negative for the emerging markets, emerging economies like India. The money will outflow from India. Last point is emerging markets currencies, including INR, face pressure as capital exits. Next is equity strategy. What can be our equity strategy in upcoming time? Hawkish Fed equity playbook. Basically, how do we tackle the upcoming tenure of Kevin Bosch led Fed? How do we tackle that kind of environment of not giving data, not talking about data, not giving press conferences? Okay. First point is avoid high debt companies. Cost of capital eats into earnings. We have to keep in this mind that we have to avoid high debt companies. You know, we have to check whether the company holds any debt in the books. You know, because if the 10-year treasury yield starts climbing towards 5%, it will be hard. It will definitely eat the profit of the companies who have higher debt levels. So it will be negative for them. And what do we do in this case? We will buy cash rich, zero debt firms that earn more at 5% rates. Third is accumulate quality banks, financials with expanding NIMs, net interest margins, control defaults. Last point is buy export earners, IT pharma that benefit from stronger dollar, weaker rupee. Okay, because IT and pharma's major business comes from USA and they earn in US dollars, so they'll be benefited from this. If the 10-year treasury yields of USA going towards 5%, they will be benefited from it because dollar will jump high. So next slide is AI mega trend. In today's time, recently Nvidia published its earnings, and that is simply uh, denoting that AI is behaving like a ghoda, raised horse. That's why I have written this line in first point. अरे भाई ये AI तो पूरे घोड़े की रफ्तार से दौड़ रहा है. Second is Nvidia's beats the quarter again, guides up and holds margins and Rubin ramps. Okay, early innings of multi-year structural AI shift, not a short cyclical blip. Everybody in USA is sensing that this is just a starting phase of the AI, and we are about to, transit from introductory phase to inferential phase, inferential phase where we, will start drawing results out of it. Supply is still the bottleneck. Demand remains insatiable. Last point is Nvidia exploring buybacks, dividends to widen the investor base. So in Nvidia, whoever in India or anywhere in the world is fearful of AI bubble, they have to keep in mind that it is not still in the territory of bubble. It is just starting phase of AI. They should not get scared of. So AI adoption is our next slide. In this, basically we are transiting from the phase of training to inference. AI's models all around the world have been, trained till now, and now they are being used to draw inferences by themselves. We are moving from a training phase to inference phase. AI begin to run daily business operations, not just lab demos. Next point is agentic workloads drive NVIDIA CPU businesses as AI agents handle real workflows. Mission critical softwares like ServiceNow get supercharged by AI. Commodity softwares, basic PM, collab tools can be eaten by generic LLMs. Next is defense and R&D. Cybersecurity and quantum frontier. As AI applications scale, securing data becomes life or death for the enterprises. The data will be huge in upcoming time, and handling that data is a very required need of the time. And securing the data is particularly very important. Advanced offensive AI requires top-tier defensive shields. Tricky cybersecurity modes, CrowdStrike, Cloudflare, Palo Alto. Tech now overlaps with national security. Governments kick winners. Chips and Science Acts in USA extension support Intel, IBM, and domestic manufacturing. Quantum players like D-Wave and Rigetti from lab to factory floor. नेक्स्ट पॉइंट इज हेडलाइन पिंग पोंग मार्केट या सस्पेंस फिल्म अरे भाई ये मार्केट है या सस्पेंस फिल्म recently in USA Michigan consumer sentiment crashes to 44.8 versus 48.2 expected. So consumer sentiment in USA has got dropped, has declined, which is very negative for the economy. Inflation expectations take up to 4.8%. That is leading to probability of a rate hike in upcoming time, led to December Fed meetings. Wash era starts with 10-year near 4.7% and confused sentiment. 80% of S&P stocks green on peace rumors despite weak ground reality. So everybody is assuming that peace, deal will be done between USA and Iran, and the stocks of S&P index is somehow at peace right now, assuming that there will be peace. But let me tell you one thing: we will only react when the deal will be signed. Before that, expecting any move in the market, major move in the market, will be fool's business. You know, Tactical map, oil rumors, bonds and levels, headlines of USA Iran MOU sparks rallies, but follow up reports conflict. That's why I'm telling you that do not believe anyone. Let the deal be signed between both the countries, then decide what to do in the market. Crude sticky around $98. Despite rumors games, crude is still trading near the trajectory of 100 rupees, $100 per barrel. Talks of Oman plus Iran toll in Strait of Hormuz could alter Brent spread. Some countries dump treasuries to defend their currencies. If real deal inflation expectations fall and bond rally. If talks fail, 4.7% for 10-year can be a launch pad toward 5%. So there will be interesting time ahead. There will be volatility in upcoming time. So we will trade the market, keeping in mind all the factors which I'm talking about right now. Next is final words. What can be our action plan in upcoming time? So first point is broader market S&P, be cautious. My point is be cautious. Don't chase rumors, drive and rallies. Don't chase rumors. Do not follow blindly to any news, any particular rumor. Crude near $98 per barrel hold is strictly holding that level. Stalled negotiations can send it back past $105 per barrel. Healthcare stocks, healthcare sector, the take of mine is to accumulate as defensive growth while macro stabilizes. US 10-year yield watch 4.7% above this equity valuations compress. So just focus on the chart, technical chart of 10-year treasury yield USA. If it starts trading above 4.72% level, reduce your equity portfolios, reduce your stake in equities as per that. When market trade on headlines, they behave like gamblers. So right now the market is kind of a trading market. You have to react quickly on any kind of news to protect your capital. Wait for ink on the piece deal, invest in realities, not rumors. Yeah,